the volume profile tool, or otherwise known as the FRVP, fixed range volume profile within TradingView. Let's get into it. So here are my settings for it. Here on the left hand side, you can see the inputs, the style as well. I've added all that in there so you can see exactly what I'm using. So I'll be going over advanced details that I've been using, tips and tricks in that regards, how to identify a range and all this other stuff. So if we just move on from the next slide, you can see it's my favorite tool in TradingView probably. It gives you a ton of different features such as the great SR levels it can provide, high volume nodes, high volume nodes, HVNs, gaps in price action where you can look for further continuation to one side or the other, determining when a trend is over, range rotations, and the customizability of it. Just the ability to be able to basically take a fixed range pool from anywhere you want, the freedom of it. I know there's another tool I forgot, it's called just the visible range tool. This is a bit more customizable. So yeah, I'll be diving into how I use it exactly within my trading, within medium time frame, higher time frame, lower time frame, scalping, which levels to be looking for, range rotations, and all that type of stuff. So let's get into it even further. Some very quick basics. You're going to be known these type of three references, the three most important levels, which are essentially the point of control, value area high, value area low. I actually want to retract that, saying it's the most important levels. The point of control is relatively important, but there's other things such as high volume nodes, gaps that you can be taken into consideration. The value area high, value area low are relatively important if they have confluence there, but the high volume nodes, the gaps, the POCs are probably my favorite levels to be aware of. But just so you know what these stand for, the point of control, essentially where the most volume has been transacted, okay? Value area high and value area low. So essentially where price reaches a set of values, and then outside of that, you're outside of the value of that specific profile, and vice versa on the other side. How I take my fixed range pools, again, I'll be going into much more detail within the actual video and explanation in regards to this, but it's similar to the anchored VWAP video where I'm taking it from highs, pivot lows, starts of ranges, again, impulses, and that's mainly it. Three type of areas. Again, there are other scenarios I've been using it as well, but I'll be showing you how you can be using this again, and showing you exactly how to use it through different examples and whatnot. So identifying a range, I think this is the part most people find the most difficult, to be honest, and part of this does come with experience, so don't kind of feel a bit overwhelmed by this, because after time and practicing with it, you'll get the hang of it. And also I'll be showing you some examples as to how to do it, and that will hopefully accelerate the process of trying to come up with the identifying a range process at least. Basically you want to be looking for impulses followed by a few candles of the opposite direction, so mainly looking for sideways price action, impulse up. So basically what you're doing is you're anticipating this sideways price action occurring potentially. So you're looking for an impulse up, few candles towards the upside, then the first few candles red, for example, that's potentially where you could start your fixed range pool from, and I'll be going over this again. Impulse down, looking for the first few green candles to be taking your first fixed range pool from. So from there onwards is where you want to be taking it from. So hopefully it's a brief example, but let's go into the actual explanations and TradingView use case of this now. So just coming from current price action, how we use the tool is going to be we're going to firstly start by identifying a range. Okay, then I'll be going into the advanced pivot highs, pivot lows, going into detail with open interest in confluence with this stuff as well. So let's get into it. And if you didn't know already, I mean, long time ago, I used to be looking it up within the indicator section, but it's just, you can use it here. I believe it's within this segment here. You can go down to here, favorite it, okay, fixed range volume profile, and use the settings I showed at the beginning of the video. When you take a pull from, essentially where I'd be taking a pull from, initially my eyes are lighting up, okay, into this first impulse down. Remember the first few green candles here, the first green candles what I'll be taking. Again, I'm using the hourly chart here, but if we just do that, there we go. This is initially the first pull you can be taking, just right off the bat. And it's basically going to be taking from the first green candle, basically to where price action essentially breaks above this kind of price action. So you can be taking even down towards here. So the last green candle before the impulse out of this range potentially. And that's your current local profile range. So if you just click on this, you can see you've got a few elements to be working with. The value area highs up here, point of control, value area low. Yeah, this is just the first example of this, taking it from impulse down, green, first green candle, taking there, and you can see where it starts to impulse again outside of this candle here, and forming a separate potential range there. So hopefully you can see here, impulse out where I'm taking it from. And again, I'll show you another example. Let's just pick it apart here, a very simple example, because there'll be times where it's a bit more complex. Impulse towards the downside here, and even like here, you can see impulse down, first green candle. This is a potential another mini range tool you could be kind of be going with. Again, I'll just kind of take it from the green candle, not the red candle impulse, and you get another mini range there. You can again adjust this to trending moves as well, but I'll go into some of that later. Another example would be down here, very clear example in my opinion. This one, massive impulse to the downside, first green candle, and then you can see a large amount of sideways price action. Click this here. Where does it then impulse back again outside of this range? Well, I'd say around here. And this is kind of the thing. A lot of this is actually discretionary. It's not systematic in that sense, as to why people find it probably a bit difficult to comprehend. It is a bit of discretion you've got to be using. It's not a systematic thing. There are certain things that you can make it systematic, but main part of it is discretionary, meaning you've got to use your own judgment. So I take it towards here. You can see apart from this is impulsing out, and you've got this range here. So hopefully there's some brief examples of how to be taking the pool. Again, this is on the hourly time frame, but you can be doing this on the 5 minute, for example. Let's show you what we've got going on here. Price impulse towards the upside here. First red candle to where current PA is now, and this is the local range we are sitting within. Okay, so hopefully you can understand that in a bit of detail. Again, I'll be going over many more in-depth stuff on this, so let's get into that now and how you can actually take further pools and use these levels to your advantage. So going into a few of the other pools now, the way I take this, again, if you didn't watch the other video on anchored VWAP, is going to be through pivot highs, pivot lows. So when you see trending price action, those pivot lows, pivot highs, it is going to be crucial. Now, what you want to be thinking of in mind, and I mentioned this in that video as well, is essentially which participants are left in the market. You know, why am I marking out certain pivot highs, pivot lows, and why not others? Well, when you want to be looking for basically untested volume. So from this high to this low, you know, this is a trending move, potentially untested volume. A lot of this trending move here has been untested. Some of it's been retraced, right? But a lot of this towards the upside has not been tested, right? So this has all been tested. So this is kind of all of this segment here, in my opinion, and from my kind of testing, is not as relevant to me at the moment. But all of this stuff here, which is kind of above this value high and looking at the outside of the value, is interesting. Okay, so from pivot highs, pivot lows, you can be using this to determine trends and whatnot. Okay, so if you see a trending move down, point of controls, etc., value high, value low. Now, what's interesting to note, let's just go over this again now. So if we take that same pool, and I just mentioned to you, well, rather than looking, I'm not really interested in this kind of segment here since we've passed by this, you know, this has all been kind of traded through. You now have this kind of segment above here, which is untested. So what you can then be doing is looking at high volume nodes. This is a high volume node. Essentially, high volume nodes are really not spoken about a lot. I don't know why. I think they're really relatively quite useful because point of control is just the exact level where the highest volume has been transacted in terms of finding a good SR level. But that doesn't mean there's not a lot of volume here to form an SR level. This is still a potential SR level where we've got volume coming in here to provide SR levels. So that's the way I'd be looking at this, you know, the high volume node here. And this is, again, subjective and kind of use your discretion to be like, where's the volume coming in? And you can say, okay, well, this is a potential SR level here at 29,411. You can see on the right axis there. As to where we could find resistance, or here, you know, and this is what we're going to be using as well. So don't always just be looking at the point of control, be looking at these high volume nodes as well. Okay, and if we're going further into detail on that, we've obviously discussed these high volume nodes a little bit. Let's discuss the gap in price action, because that's what we can see here. You know, you can see fairly clearly that yes, you've got all this volume here, but also then you've got a large area where there's literally barely anything holding you back in comparison to what's around it, right? So you can say that, well, I would say that, again, kind of using the single prince theory, this is an area where price can move really quickly through and hit the other end of this. And again, I remember, look, you know, it moved really quickly through it and hit the other end of it. So this is what you want to be using as well. Don't just be looking fixated on that point of control. Yes, they're useful. Yes, they are great, but also be fixated on the high volume nodes, you know, outside of value potential. Where can you see a reaction, as well as, you know, these gaps, where can price move quickly? Again, you don't need a volume profile to recognize these gaps, but you know, again, it's there to recognize, okay, in a certain trend, where can price move quickly? If price is acceptance above this level, why would you be interested in trying to short it? Again, in a similar fashion, another setup that I'll be going into in much deeper details in another video or something is when you see these first tests of these resistance, or the gaps essentially. So you've got the gap, the gap starts here, for example. You know, let's just draw a horizontal line here. Right, and generally the first test of these gaps will give like decent pullbacks. Okay, for many examples of this, not just on like a higher time frame, but on like the 5 minute, the 1 minute, it is very common to see this occur. First tests of these massive gaps in where there's no volume sort of holding it back, price can move really quickly, and that's something just to keep aware of. The last kind of pool that we're going to be looking at essentially is going to be the start of impulses. So obviously we discussed trends, high to low, range bound movement, which I'll go over again even in further detail, but we're going to be looking now at these just impulses. So impulses out of ranges, it doesn't necessarily need to be, these are similar to trending moves. So when you see a trending move, you know, the high to low is similar to that, but you're going to be looking at when a range is kind of broken out of. So if we go back to this decent example here where you had this range where you have your initial, you take your range from here, for example, where the sideways price action starts, where it ends here, where it starts gets the impulse, rather than taking it from the low, which is what you can do. What I found is if you take it from this point here where the impulse begins, you're dealing with another set of volume players. It's not necessarily the same players who are trading within the range, but traders who are basically potentially trading a breakout or an impulse. So if we then just take that fixed range pull from even the start here to, I don't know, you would be doing this in real time. I'd be just taking up to here. You can be using this as potential again, further key SR levels. Where's the high volume coming in? Again, high volume node within the outside of the value area, point of control here, value area low there. The value area low and value area high, they're useful, but unless they've got confluence there, I don't find them extremely useful. The high volume nodes and the gaps, look at this. So another high volume node here, just picking apart this volume profile is what you're going to be doing. Just go back in the chart, take fixed range tools and pick them apart. Pick apart where's SR levels, where's the key parts of them, and how can it be useful. So let's go into actually how we would trade these, which levels would we want to be interested in, which not, and go from there as well. So as alluded to in this earlier segment of the video, untested volume is preferably what you want to be looking for. So what I mean by that is volume that hasn't been tested that much. You can see here we saw this impulse out of this prior range here. Nowadays, once you get the hang of the fixed range tool, you can just eyeball it and very, very quickly start picking up, okay, this is a range, this is a good level, this isn't. So you can see this was a clear range here. Where this start is a bit debatable because you had a lot of wiki kind of, very volatile movement here, kind of testing multiple ranges here. But I would take it from here even. Okay, first kind of red candle starting from here on the 30-minute. Up towards here, and this is all relatively untested volume. Okay, untested volume in the aspect of we've moved outside the range. The first acceptance back into that range is kind of untested, so you then be looking to trade those SR levels. Yeah, looking for these untested volume levels. So you can see here that this point of control would then be even more significant now that it's been tested. And I guess in this scenario it's kind of a good one because it got tested to the dollar perfectly and we're seeing a bit of a pullback here. But don't just be alluded to the fact that we're going to see a dollar reaction off any sort of POC. No, yes, they are great SR levels, okay, but essentially what you want to be looking for is the untested volume. In this case, it's actually a very, very fared out volume profile, meaning there's no significant high volume nodes outside on either end at the moment, and the middle point is very, very D-shaped. It's very, very, in that sense. So you can see the point of control is untested. This would be a decent level to be looking for confluence at, taking your Fibonacci pulls from, etc. And then obviously from that point onward, you got your untested levels. So these are the levels I want to be trading: untested, high volume nodes, volume profiles, etc. These are the best ones. So if we even take it from now, we saw this impulse out of this mini range earlier. We can just go again from this green candle to where basically it started to break out from. This again now is your next kind of important level. So now this is a really good example because we've got some levels outside of value that I'd be looking and interested in trading. So you can see here, obviously we've got the point of control, the value area high. Obviously there's kind of this enhancement. When you see acceptance into value area high, look for value area low. Yes and no to an extent, because you want to be very much aware of the levels in between that and looking at the gaps, looking at the high volume nodes, etc. But if we're just looking at the POC, yep, great. This is going to be a key level. Okay, but on the other side, I'm also looking down towards this value, outside of value here. You can see there's a high volume node coming in, and that high volume node is coming in down here. Okay, and that's coming in down towards 27,984. So yes, this is a key level, but also now you can say that this is down here is also a key level as well to be interested in trading. So don't just be looking at the point of controls. Look for these untested regions of volume, because we've obviously moved outside of this now. So the first test again into this is going to be further. It's going to be even better. Same way here. You've ranged, you broke down, you've ranged, you've broke up. Here's your range, here's your range, here are the levels coinciding with that. Now for some further advanced tips and tricks, something I've kind of gone over a bit in time with some of my students is essentially looking at these trending moves and kind of deciphering a bit about them. Because let's say, for example, you've got your volume profile tool, you take it from the pivot high down to, let's say, this pivot low here. What my theory would be, and what I'd like to look for, is if the point of control or any significant high volume node is reclaimed, you'd be looking for the overall swing high to be taken again. Okay, again, this isn't every scenario, but this is a general theory, So let's say, for example, you see the downtrend, you're downtrending, you then break above this point of control. Okay, that kind of signifies that this downtrend is coming to an end. You then think, okay, well, it doesn't necessarily think we're going to have to revert the whole move, but I'll be thinking a decent significant part of this is going to be, retraced, or we're going to be seeing at least a lot of sideways action going forward. I wouldn't be constantly trying to short, especially after you've reclaimed, in this case, a POC of interest. Even up here, though, you can see you've got quite a few interesting levels: high volume node, of interest. So don't kind of allude away from those ones as well. But the theory I'm trying to get at with you here is you see a trending move. Once you reclaim a significant POC, okay, sign of strength. Don't be trying to forcefully trade that trend in the same direction again. Now, discussing range rotation. So obviously you can be looking for this as a general guide, but just so I thought I'd cover this just in case. But obviously if we take our fixed range volume profile again from what we've just been discussing, you obviously got this range, and the idea is people would say, okay, once you see acceptance into value area high, you would be looking kind of for at least a point of control, which is true in my opinion. You know, if you see acceptance into value area high, in this case, it signifies weakness. Okay, so yes, it signifies weakness, but how can you turn that into an actionable thing? Well, it signifies weakness, so why would we be actively looking for longs if we're still hovering around here? You then want to wait for a further sign of strength. Okay, you know, in that case, and this is where things can get kind of discretionary, because example scenario, you know, you see acceptance into value area high, sorry, you're trending back down, acceptance into here. Well, then what do you then do? Well, what I would do is I'd take a fixed range pull from that pivot high, you know, to wherever that pivot low is, and then go, okay, where's the point of control of that, or where's the anchored V up of that? Until that level's reclaimed, we're back inside value area high, and this is showing nothing but signs of weakness, and we can continue to look for lower. So again, you've got a range, you then trend back into that range, take a fixed range pull of that trend, and use it like that. You know, you've got to be constantly adapting your pulls in this scenario, and not just taking one pull and being kind of fixated on that one. You've got to be actively approaching it, you know, taking different pulls, which levels of interest, which levels are untested are the best, and that's the way to go about it. Because when you take a fixed range pull of this kind of trend, for example, you're then dealing with further untested volume, again coming into the theory that these untested levels are generally better to be trading off of, and off the first time will give a better reaction to be trading. So going into a few more advanced tips in this scenario, okay, I'm going to be using ExoCharts. So if you want to be using that, ExoCharts is the software you're seeing on screen now. And we're going to be looking at ranges and a few characteristics of them. So obviously after you've identified how to pull a range, pull these trends, even like the trending fixed range tools, the theory applies the exact same to this. What's the characteristics of that? This is something people don't really dive into too much. I think it's going to be quite useful for you. So obviously we've identified, if we just go back over to TradingView, okay, 5-minute chart, we've got this potential range that we were discussing here, you know, from this red candle onwards. Very simple, well, fairly simple in that scenario. If you understand that, let's just move straight back over to EXO, because what I'm going to get at here is you've got the same range here, okay, but if you take a pull in EXO using the dynamic profile tool on the left hand side, okay, I'm going to take it, it's providing the same value. Again, you can change this if you want to, whatever you want. I'll go over the open interest in another video in more detail, but if we just change it back to volume profile, the cluster type, okay, you can see at the bottom here, where is this? Okay, at the top, you can actually see the open interest and the CVD within this. Now, I've discussed open interest and CVD many times in probably my very first YouTube video, so go watch that if you like. Open interest is essentially the amount of new positions coming into a market. CVD, how are we seeing aggressive buying or selling? There's a video on that as well. But in this scenario here, in brief detail, this shows me that there's a lot of new shorts. Well, there's a decent amount of new shorts opening. So we're ranging. Okay, we haven't broken any key supports to the downside, and there's a load of new shorts opening. Well, a decent amount, a fair amount. If I had to say it's extended in one side, there's new shorts opening. My brain then goes, okay, well, I would favor those shorts getting kind of wrecked and thinking that this is going to squeeze towards the upside at least to stop them out. Okay, so I went on Twitter again today and actually was like to myself, okay, well, using that to my knowledge, it would make sense to potentially squeeze those shorts out of position. Again, new shorts opening within this local range. We've identified that using ExoCharts. New shorts. We haven't broken any support to the downside. We haven't seen any major sign of weakness or anything yet. Keyword there, yet. This can all change. So what would be my favorite opportunity? Well, it would be to at least push higher, to maybe to squeeze them out, close them out their position. Either that position, the short squeeze, or we see a swing failure pattern of the high. Okay, and then that presents itself with a short trade. So also actionable advice onto how to use these ranges in the sense of finding actionable triggers off of them, the characteristics. You know, in this one we have new shorts opening. That goes, okay, well, my brain thinks, okay, it's going to maybe wreck the majority of them, trap them out before then going in the direction they initially intended on moving. So looking at the characteristics, looking at the desired fixed range pool that you've actually chosen there, because I've just taught you how to identify an exact range, and then using that and going, okay, well, the likelihood we wreck the majority. How can we then benefit off of that? Okay. Again, we can be wrong on this. I've been wrong on this before, like quite a few times. And this is the thing. It's never 100%. Nothing's 100%. And I'll dive into this again. Watch my former bias video. Find an edge. But if we, for example, if we don't go higher, we just completely drop. we drop from this and we lose that value area high we were discussing, or the prior range, well, then that's a sign of weakness, okay? And then we can start to change our bias that these shorts are in profit, and until they get, until they're offside again, we can be looking for further downside. But that hasn't happened yet, okay? So we're dealing with what we're working with, okay? And what we're working with is currently those shorts they're not offside really, some of them it's a mixed batch in that sense, but we haven't seen a sign of weakness, so I'm making the assumption that we will see a move upside to wreck them because they're shorting before we've seen any sort of weakness in the chart. If you did enjoy all that stuff, make sure to check me out at Luxury with an Extra Y. Again, free stuff there on Twitter, just constant intraday updates and stuff like that over there. Just Luxury with an Extra Y. Hope you enjoyed.